Hello students and welcome to this discussion of case study digest of SCMPE. We are on chapter 3, Lean and Innovation. We will be discussing two case studies here. One is Bread and Butter Company and the other is W, both relating to the topic of lean. Now, if you ask me, there are no other topics in chapter 3. There are. The problem topics and very important topics are just in time and cost of quality. Because they are problem oriented, I have not been discussing them. If you are interested, if you do want these discussed, do let me know in the comment section below and we will release a set of videos relating to the topics that you request for. The other topics in this chapter, like 5S, Six Sigma, and BPR, we shall be discussing the case studies, but it will be in the next set of videos. Okay, students, before we begin, a quick tip. I have mentioned this before, but nevertheless, when you tackle a case study, this is what you should do. Remember, read the required section first. Required, right? You have three pages of case study, and ultimately they'll ask you what is required. Don't read the case study. Don't read the entire case study. First, go straight to the question. What is it that they want? Do that first. Read that. Why? Because this keeps you engaged while you're reading the case study. You know what you're looking for. Required. What did they ask for? Did they ask for advantages? Did they ask for issues? Did they ask for what went wrong? Did they ask for disadvantages, benefits, whatever it is? So you are on the lookout for it. Your mind is alert when you are reading the rest of the case study, right? Your subconscious mind will be working towards the solutions. Right, students? Okay. Now with this, let us begin. The question relates to Bread and Butter Company. What is required? Again, I have jumped straight to the required part. We have no idea what the case study is about. What does it say? Consider yourself as a management account who was referred by one of the friends of Mr. Junior's. So there is a junior son. What are we supposed to do now? He has following questions in mind that clog all doors of ideas to revive. So they need to revive something. Okay, what is the question? What are the questions? What are we doing wrong? So when we are doing the case study, reading the case study, remember, be alert to the fact that we need to know what we are doing wrong. What did the company do wrong? Is there any way JTI could continue its current business? And whether they can continue. And third, we need to save on costs and regain the lost trust of customers. How do we do this? You see, there was no dearth of loyal foodies when we used to sell just breads and sandwiches. Even though we charged high prices back then, we never had to confront such predicaments we currently are in. So obviously the company is doing something wrong. The first question is, what is it? Next question is whether they can continue or with their business. So we need to give them ideas on whether they can continue. And they have also said another thing is that we need to cut costs and regain the trust of customers. So cut the costs, create value for customers. That's about creating the competitive advantage. And they've asked us how we can do this. How we can do this. This is what is required of us, right, students? Okay. So with this, let us look at the question. What does the question say? BBC started its business a couple of years ago when customers preferred bread to other food items in their breakfast. Today, the market has seemingly turned narrow for bread and sandwiches. The high nutrient rich breakfasts like cornmeal, rice crisps, and oatmeals are taking over the market share as opposed to bread and butter or a simple sandwich. Clear, students? They had bread business. They were doing very well. But now people prefer, new products have come in. People prefer that. BBC breads were custom made, ready in no time on order and delicious, exactly how they need to be. The prices charged for the products offered were on high end. So they were high prices, but it was the only store of its kind in the area covering 50 kilometers of East Georgia. And Georgians were fond of the unique service offered, and the taste filled their morning experience with happiness. Clear? So what is it? What do we get from this paragraph? They were initially making bread, but now the bread market seems to be shrinking because it has been replaced by other high nutrient products. Clear? And what else? BBC bread used to be custom made, promptly delivered, very delicious and very, very popular, though highly priced. Though highly priced. Right, students? Next. The business prospered and profits increased phenomenally on a year-to-year basis. The prosperity called for additional space and resource requirement. BBC contemplated that since they would have to hire more staff to meet the increasing demand and the space they were trying to lease was more than what they could use, right? They planned for add-ons to their current production line, breads and sandwiches. Correct? So the business was so good that they decided to get additional space, additional resources. Because they were getting additional resources and more space than they needed, what did they say? They said, let us do other products also. And they started selling frozen food items, desserts, beverages, and meals for train passengers. The bread butter company was known as Just Taste It, JTI. Clear? So business was good. They increased the capacity. To use the increased capacity, they also added frozen foods, desserts, beverages, and meals for train passengers. The new company name was Just Taste It. Taste. Now they started to hire new people with flawless cooking skills. There seemed to be more supply than demand, and it appeared that newcomers had a great cooking talent and were interested to learn more to take it to an altogether newer level. The staffs were welcome to share their unique recipes, and the team gathered to prepare items based on the ones selected and approved. The employees started preparing meals on a prior anticipation of demand, including excess meals for any stockouts. In a month or so, the warehouse seemed to be a chaos full of raw materials purchased from various suppliers based on suggestions of staffs and pre-packed meals. Did you understand, students, what's happening? New people were hired, but their cooking skills were very pretty good, and they were interested in trying out new recipes. And so what happened? the once the recipes, they suggested new ideas, if they were approved, they began to make the meals in anticipation of their demand. Now, if all staff or many members of the staff start trying out their recipes, you can imagine the amount of raw material required, different raw material. It is not standardized, correct? So the warehouse, there was a lot of material. There was utter confusion in the warehouse, right? The kitchen was out of space to accommodate the current staff comfortably. The myriad ideas took JTI in a mirage creating problem in coordination among staffs, since many of their ideas had to be dropped and others that were welcomed created a negative cost benefit equation. So they are trying out new recipes, you need material. They try out, then they are rejected, again new recipes are coming in. Followed? So too many people, too many cooks, and the supply was more than demand. Production was in anticipation of demand. Do you understand, students? It is not that there is demand. We anticipate, we predict. Do you remember that this was called the push method? Push method versus pull method. We have the pull method in lean, where the demand pulls production, correct? But in the push method, then you make and then you push it into the market. Too much raw material from different suppliers, stock of pre-packed food, and too many cooks. So this is what happened. Too much of raw material, different suppliers, because different new recipes are coming in. That's why the warehouse is such a confusion. Then in the warehouse, you have stock of pre-packed food because you are making food in anticipation of demand. Right? And there were so many people, there was a space constraint, and there is no coordination. And of course, on several ideas, there was a negative cost benefit equation. Okay, the bread and sandwich business was hit by the negative publicity of the train meals. So train meals got negative publicity since why? JTI had to compromise on quality to earn enough profit to keep the meal business up and running. So they compromised on the meal quality. Because they compromised, their reputation suffered, and this reputation affected the bread business also. Gradually, the loyal clients turned down on them and started to switch to other caterers. The management of JTI was wondering if at all the business should be continued since there was not enough orders and the pre-prepared meals are getting wasted, thereby burdening the firm with huge costs. The frozen items, desserts and beverage business were the only support they had. Clients continued to buy those items considering frozen items, desserts and beverages were just bought and served to them on a margin. JTA ended up losing customers' trust and had no other option but to stop preparing anything for them. Followed some things, the frozen items, desserts and beverages seem to be doing okay, correct? And they got a margin on that. They were bought and just sold. They thought of bringing a changeover and presenting themselves as retailers rather than preparers of meals, breads, and sandwiches. So they were thinking, let us just get into retailing business. We buy and sell. The management of the company was in desperate need of a savior that could prevent the demise of JTI. So what happened here? Meal quality compromised to improve profits. As a result, it affected the bread business. Correct? Pre-prepared meals were getting wasted, but frozen items, desserts and beverages made good margins. The meals and breads went for a toss. Next, how to save JTI was the question. One of the management people, Mr. Juniorson, contacted you and approached you for some valuable advice in this regard. He also came up with their income and expenses. So there is an annexure. We'll go through the annexure also. He came up with the income and expenses so that you could provide some insights on how to overcome the loss-making situation and rebound back to a prosperous profit-earning history. What is required? Consider yourself as a management accountant who was referred by one of the friends of Mr. Juniorson. He has the following questions in mind that clogged all doors of ideas to revive. You remember what were the questions? What are we doing wrong? Can they continue their current business? And finally, that we need to reduce costs, bring back the trust of the customers. After all, we could do this before, right? We had so many loyal customers before when we were just selling breads and sandwiches, even though we charged high prices. So how are we going to gain this competitive advantage? How to save on costs and regain the lost trust of customers? Right, students, this is what we are going to answer. But before that, they gave you an annexure. So let's see what the annexure does. Just taste it. There is a statement of income, amount in thousands, revenue 3 years from 2017, 18 and 19. What are the revenues? If you notice, breads and sandwiches was 49, then became 45 and then became 41,000. So bread and business actually fell. Right? Desserts and frozen food from 68,000, 79,000 went up to 92,000. This seems to have improved, right? Next, beverages also 30,000, 34 and 47,000. That's really doing well. Good. That has also improved. But meals from 134,000, this is a revenue we are talking about, 120, 77,000, this has fallen. So like we said, breads and sandwiches fallen, meals also fallen. However, desserts and frozen food and beverages, they have shown an increase. Then you have costs and expenses. They've given you a list of food items, ready-made frozen, desserts purchase, beverages purchase, labor and other expenses. And overall, if you see, you were making a profit of 38,726. Of course, the numbers are in thousands, mind you. 38,726. Then it reduced to 7,226 and a whopping loss of 41,423,000. Correct? In 2019. Now, then they have given you some explanations. What is it that they have given? Since beverage market was competitive, commanding high profit was never an expectation. So from the beverage market, it's very, very competitive. So you don't expect a very high profit from them. Frozen items were sold at a markup of 10% on purchase and cost of Georgian preferred frozen foods and fresh foods equally. They've given you a split. Desserts are all-time favorite irrespective of seasonal variations. Of the desserts and frozen revenue, 60% sale was dedicated to desserts. They've giving you splits, right? 50% labor towards meal preparation, 40% towards sandwich and breads, and the rest 10% serving desserts. Beverages did not take labor hours because they could be refilled in self-serving dispensers through which clients were served. Once they served themselves with their choice of beverage, they stood in lines to complete the billing of the service. So beverages was very easy that way. Of the cost of food as raw materials, only 40% was dedicated to earning bread and sandwich revenue. Rewards to staff was paid on the basis of recipes being approved. Oh my God, just look at that, students. You were told that recipes were approved, and then you were also said many of them were dropped, some were continued, new ones were taken. Now, how are you giving the reward to staff? It is not based on whether you can continue or whether the customer is happy with your new recipe. It is based on the recipes being approved, and so many recipes, new recipes were being approved. This is what, so what does this do? Once it's only new recipes are being approved, the staff is not concentrating on cooking. They're actually concentrating on thinking of recipes which will get approved, not even whether the customer will be happy with it, but whether they will be approved, right? There has to be a cost benefit. If you're approving a recipe, what are the costs and how much is the customer willing to pay for the same also needed to be analyzed. That is not done. So this is a big flaw, right? Now, having said so much, based on these numbers, we did not have to make any calculations. Product wise, service wise, product wise, analysis is already given to us, so it saves us a lot of trouble. We can straight away look at these numbers. You don't have to do any calculations here. It's all given to you. What do they say? 2017, 18, 19 revenue from breads and sandwiches, reducing the cost, you get a gross profit from 5,400. It has come down to minus 19,000. Next, revenues from desserts, if you see, 3,020, 3,610, 4,280. So there has been some marginal increase in revenue from desserts. What about frozen food items also? 2,473, 2,873 and 3,345. Again, this is also, there is a it has increased. Revenue from beverages, from a loss of 16,000, there's a reduction by 50%, right, to 8,857, and now there is a profit. So beverages are actually looking good, right? Revenues from meals, that is a problem area again. So meals, again, we see, like we knew before, of course, that they are making loss from 63,300. They started like that, became 36,000, and at a loss of 18,000. At a loss of 18,000. So this is the split in an extra that has been given. Now we have to answer those three questions, right? What are we doing wrong? Whether we can continue the current business, and we need to save on costs and regain the trust. How are we going to do this? Correct? These are the three. So we'll just look at certain pointers and then proceed to see the answer, whether they are all being covered. So what are they doing wrong? What are they doing wrong? The ideas were good. The ideas were good in the sense that they were making only bread and sandwiches, and then they decided to add more products. If you add more products, you may probably make more profits. You are spreading your risk. All that was fine. And they were planning to make use of existing capacity to make the new product. So everything was fine, but they did not implement properly. So what went wrong? As a result, there was a lot of wastage. Why was it wasted? What was the wastage? One was wastage of the prepared food, because in anticipation of demand you were making, and then food, after all, how long will it last? It gets spoiled, and they were wasted. They were wasted, right? And similarly, if you're going to store food, packed food, pre-packing in anticipation of demand, you need space for it. You need space for it, right? Lots. Next was commission paid to staff. This was, we said, big flaw, right, on the approval of recipes. Therefore, what has happened? There is more material, because everybody is thinking of new recipes where you're going to get paid more, right, if your recipe is approved. So everybody is ordering material. Nobody is bothered about the costs involved. Disorganization, disharmony. The warehouse was in a chaos. Cooking staff were busy thinking of new recipes, not really cooking. Followed? So, and was wastage. Remember, elimination of wastage is all about lean. The next one is the wrong commission paid to staff and disorganized warehouse. Access should be restricted and maybe 5S techniques could be used to arrange inventory so that finding an item is easy. Disorganized warehouse, whenever inventory, tools and things are not in order, there is clutter, we usually refer to the 5S techniques to arrange them. I hope you remember 5S. If you remember 5S, you sort, you set to order, you shine, you standardize, and sustain, right? You sort them, you put them in proper order, you maintain cleanliness, you standardize so that everybody knows what is to be done, and you continue, monitor, sustain the practice day after day. Anyway, is there any way JTI could continue its current business? Do you think they can continue? Yes. How? We have to get back to customer satisfaction. So what we will do is we can look at the 5 products and analyze each of them. Breads and sandwiches, we need to improve the quality. Improve quality of bread and sandwiches. This was after all a very popular product. Beverages is already doing well. Maybe we don't need to change. Frozen food and desserts could consider. Maybe we can consider making it in-house instead of buying. Right? Because beverages was very easy without any labor, etc. Frozen food and desserts, we are making marginal profits. Maybe if we could make them in-house itself, maybe our profits could improve. So this could be one way of tackling. And meals, of course, let us do one thing. Let us change the production process. Let us introduce just in time, because for packed food as such, meals particularly, it doesn't make sense in anticipating demand. Fresh food would be far more popular. So that whole process could be changed. We could have just in time based on demand, actual demand, not anticipated demand. You get the difference, students? Not anticipated demand, but based on actual demand, we will make the meals. Just in time would be introduced. So we could maintain the quality of the food, and mind you, you remember it was the bad reputation from the bad quality of the meals that affected our bread and sandwich business. So they should be able to continue. This is what we will discuss, if there is any way they can continue, and how do they save on costs and regain the lost trust. Gaining the confidence should not be difficult, even at premium prices, because this is what they did. So what are we going to do? Reduce cost on one side, increase value for customer by improving quality. Obviously, if you do this, what happens, students? I hope you remember, it's all about competitive advantage, right? Competitive, staying ahead of competition. How do you get this competitive advantage? By increasing value for customer and reducing the costs. Should focus on customer satisfaction, deliver to the customer what the customer wants. What does the customer want? The customer wants good quality, fresh food, right? Good quality, fresh food. So let us do it. What did we discuss? What did we decide? That it is best to do it on actual demand so that fresh food can be given and customers likely to be satisfied. For cost saving, this commission paid to staff, this thing we could avoid, right? Let us base it on customer satisfaction. Remember, students, if suppose you have a very tasty food, very tasty item, but it costs a lot, it costs a bomb, then the customer is not going to, many customers may not purchase that particular food, right? So that cost benefit ratio will also get adjusted when we are basing it on customer satisfaction. Correct? So this will ensure revenues for additional cost incurred. So only if the customer is satisfied, only then should some kind of commission be paid to staff. Not for all recipes which are approved without considering costs and such other factors, right? The quality, how much material is involved, so much confusion is clear. We are not looking at any of that. All we are doing is just approving. And if it is approved, all the staff needed to do was to get their recipes approved, and then they could get commission. So their whole concentration was on earning the commission, not really on cooking. Then what else could be done? The production process, this we already said, would be redesigned with JIT initiatives, just-in-time initiatives. Wastage of food would be avoided. Wastage of food would be avoided, pre-prepared food, and the wastage of the storage space, we would save that also, because it would be as per demand. We are not going to make food in anticipation of demand and store for long. Correct? Fresh meals would be delivered at lower cost. Transportation costs also would be minimized, right? When we make food and then distribute, trying to sell in advance, there would be more transportation costs. Now, so let's discuss this one by one. Let's look at the answer fully. See, all these points are covered. Once you know the points, write a couple of sentences on them, expand it a bit. That's all. That's all, students, that you need to do. What are we doing wrong? The idea to expand the business by diversification of the product line and adding new products, were all directed towards growth and greater profits of the business. So this is what we are saying. Their idea was really good. Remember, I mentioned this. The idea was good because they had existing capacity, large capacity. If they have, they will use it for other products also. This would have given them an additional edge over other bread manufacturers, since more the products offered, more the awareness among the customers. However, the manner in which the business was executed lacked proper planning and organization, which is essential for survival of any business. Further, a business success depends on the execution of correct strategies or doing the right thing at the right time in the right manner. So let us discuss what went wrong. So all we have mentioned is that this is like a background that we have given, that we were making bread since capacity improved. We introduced other products, which was a good strategy, but the implementation was wrong. There was no proper planning. So what has gone wrong? What did we say? That too much of wastage, we will apply lean, right? Avoidance of wastage is normally lean. With lean thinking, what do you have? Maximize customer value and minimize waste. Paying commission, that is the other thing we need to tackle. And third was the disorganized warehouse, where if you apply just-in-time principles and not allow everybody and anybody into warehouse, the warehouse would also get organized. So, production process in any business, the first point, production process in any business, a series of activities, and it can be made efficient by eliminating. So we are talking of elimination of waste. A lot of activities, eliminate waste, apply lean thinking in the conduct of these activities, where all waste activities that consume resources but create no value for customer are identified and then eliminated. Those things should be adopted. Mind you, students, you don't have to write anything verbatim. If you've understood the points, you write in your own words. This is just a guidance to let you know how to proceed, right? Now, what is lean manufacturing? How will you apply it? There are several things that need attention. First, lean thinking is based on just-in-time production, whereas JTI is producing on prior unexpected demand, anticipated demand, right? In case in fear of stockouts. They don't want stockouts, so they're anticipating making more and keeping. We must remember that when operating in a service industry, and that too when dealing in food items deteriorate fast. They are perishable, right? Maintaining the quality of food items becomes the top priority. So we must design a production process such that the safety and retaining of nutrition, retention of the nutrition of the foods is a priority. So this is how it should be planned. Customers desire fresh and nutritious food. In such a situation, pre-preparing the meals and storing them is not only a non-value added activity, also a prolific challenge to the food safety and requirement. Thus, going by the lean concept, JTI should prepare meals based on orders received or should pack meals just enough to serve the customers on the same day. This is one of the mechanisms to work smart and also to get rid of two forms of waste. One is the cost of storing, the waste of storing pre-prepared meals, and the other is the wastage of the prepared food that were not being sold, which were prepared in anticipation of stock. Preparing fresh food will increase value for the customer with improved quality and the customer's trust will be reinforced, thereby adding a competitive edge. So what went wrong? First was too much of wastage, and we'll avoid it by lean. Next change over required is to switch the base. Then next we talked of commission paid to staff, right? So what do? Let's base paying of commission. Currently, what is the system? The staff receive commission on the basis of recipes approved, irrespective of the cost incurred to JTI. So executing any recipe requires assembling of raw materials to prepare the food item. This has a financial impact on the food. Purchase of raw materials from various suppliers based on staff recipes and their suggestions have led to a huge cost burden on the firm, leading to a negative cost-benefit ratio. Systematic operation of purchase department is highly imperative to control cost and achieve efficiency. Purchase activity should be related to production activity, which is a direct factor of demand. Followed commission paid to staff we are talking about. So what has happened, because people are making new recipes, right? And they are getting material. The warehouse is getting full with all kinds of material. So what are they saying? The purchase activity should be related to production activity, and the production activity should be based on demand. Therefore, rather than acting on staff suggestions, purchases should be made based on requisitions from the production department, which has to operate based on just-in-time approach. So, production department is the department which is producing the food, right? Moreover, it is also felt that the staff participation has not been guided in the right manner, because it has resulted in more disharmony than teamwork. Rewarding them on the basis of their recipes rather than asking them to redirect their cooking efforts to the financial interest of the firm and to the satisfaction of the customers sounds an incorrect encouragement. Working at below the optimum coordination levels result in underuse of skill and cooking talent, which is truly perceived in this situation. So they are not working at optimum coordination levels. That's all they are saying. Okay. So first was wastage. Next is to change the system of commission to staff. And third one is the disorganized warehouse due to lack of systematic purchases and other involvement of staff in the purchase activity. To achieve maximum production efficiency, building a favorable working environment is very necessary. This requires providing cooking staff with organized, clean kitchens and limited access to warehouse. Further limited access to warehouse will help to keep it more organized. Further limited access to warehouse, so that way it can be better organized. Currently, it seems the storage facilities of raw materials and food items are totally messed up. We need to introduce an effective housekeeping system such that warehouses are organized systematically with all raw materials arranged, employing specific techniques like 5S for storage and organization. This will lessen the time required to locate them when on demand, thus removing the bottleneck developed due to time consumed for non-organization. Because it takes a long time to find material, let's say. What a wastage of time, right? Another waste, elimination of yet another waste. Clear? They should have proper systematic purchases, not that anybody can order raw material. It should be like that. So the three in a way are interconnected points. One thing leads to the other. But these are the 3 points that we have focused on and said that what is wrong. Correct? Next, is there any way that they can continue? Remember what we said, they will focus on customer satisfaction. Each of these items, bread and sandwiches and meals are what is suffering. So the bread and sandwiches should improve quality. Meals also, they change the production process, improve quality. And then they also said beverages are doing well, so let's not do anything about it. Frozen food and desserts, they could consider making in-house instead of buying. These are the suggestions we would give. So let us see again, how do you say the current business situation appears to lack planning and systematic approach. So with proper planning, strategized planning, focusing on customer satisfaction, JTI will be able to continue its current production activity instead of its planned switch over to just retail activity. So if they do that properly, if they can plan well, organize themselves well, they don't have to get into retailing business. Instead, they can make. When looking at financial figures, we have 5 products to focus on. What are they? Currently, JTI only manufactures 2 of those, breads and sandwiches and train meals. The other 3 are purchased and served at a margin. The sandwich business was hit due to quality compromise in the meals business. So to revive this business, not only must the quality of sandwiches be controlled, but also that of train meals. Correct? Beverage business is good, requires very little amendment since beverages will have to be purchased and served for a margin. So it is not a cause of much concern. Now coming to frozen food items and desserts, it is recommended that JTI could make a detailed financial analysis of buy versus manufacture option, and in-house production of these items could be more profitable because they have capacity, right? More capacity. Let them use it to make this. At least they should consider, make a cost-benefit analysis. They should keep in mind the current resources available, correct? Already there is resources available. Next, for meal business, the production process should require a changeover, complete changeover from just-in-time production to systematic purchase. So needs a complete changeover. So what should they start? They should have just-in-time production. There would be proper purchases, systematic purchases, implementing housekeeping system. All this for achieving organized storage facilities. With all these 3 things, correct? These strides will help to reinforce customer trust in the train meals and thereby rejuvenate the entire JTI business. The meal business is directly dependent on maintaining quality. The business that generated profits of 6.33 crores back in 2017 and 3.6 crores back in 2018 has become a loss-making business of 1,800 crores in the year 1.8 crores in the year 2019, only because of a fall in quality. Okay, so by doing all this, they could continue. They could continue to be in business. Can they continue was the question. And the last part is how to save on costs and regain the lost trust of customers. So this is what is required, gaining confidence of customers. What are they saying is not new because they have done this before. They were very popular, even at premium prices. So they must add value on one hand, reduce cost on the other, and improve competitive advantage and profitability. Focus on customer satisfaction. What the customer wants should be redesigned with JIT initiatives. Both wastage and storage, wastage of food, pre-prepared food, and the wastage of storage space can be avoided. Cost saving, even commission paid to staff will change. Correct? So let's look at this. Regaining customer confidence is no rocket science for JTI since it had successfully proved its success in the past when it was known as bread and butter company. The company was known for its quality and customers did not resist paying a higher price for celebrating their happiness in the food they want. Due to the series of undesired happenings, the focus of JTI shifted from customer. A correct focus can ensure its move in the guided direction. Okay, so what will they do? They need to perform as per customers' expectations, bringing to their table what they want and ensuring a cost-benefit ratio for the firm. So re-engineering of the way they currently work, this is a key to turn things favorable and ensure business success. Okay, so what are the cost-serving strategies? So what are we trying to do? Create value for customer, that is by improving the quality, right? And since they've already done it before, it should not be difficult is what they said. Cost saving strategies, they will say direct the cost to the revenue it earns. For example, when you're paying commission to cooking staff, it should be based on customer satisfaction because then revenue will come. Now you pay them. Since revenue is coming from that, you can pay them commission, correct? We can keep control mechanism for this. You can ask customers to rate their experience with the food, and the staff service would help the firm to improve with the changing needs of customer and rate and reward their staff. This will ensure that the firm incurs costs towards generation of revenue. We also need to know what kind of transport mechanism is used to deliver meals to customers on train. To save the transportation cost, it is better to use in-house transportation vehicles rather than outsourcing the activity. This will ensure. So if you have your own transport system, then timely response delivery of meals will be there at a reasonable cost. Further, we must not forget that redesigning the meal preparation process will call for less storage and therefore less packing. This will save significant packing costs. Shall we move on to the next one, students? So we've jumped straight to the question, what is required? Of course, this is a short case study. You may not want to jump to the required section. In such a case, you may read the whole thing. Anyway, I'm doing the required section first. Identify the issues that W may face when launching online retailing. So it's about online retailing and what are the issues that you will face. This can be a very general question. About the issues any time when there is online, some points you should get from this. Explain the requirement for IT to be a strategic decision within W. The information technology, that a strategic decision within the company, within W. These are the two things that we will consider. Right? Let us go straight to the question. W is a scented decorative items manufacturing company. W has always traded profitably due to targeting the niche market for high-value decorative items. Decorative items often use waxes other than beeswax and paraffin. Bayberry wax is derived from the fruit of bayberry bush and has a distinctive aroma, making it popular for manufacture of scented items. The market for scented decorative items is a saturated one, but the CEO has identified that they could begin selling online. None of W's competitors have a major online presence, and W itself only has a simple website that lists locations of its stores as well as products information. Followed, students. So what are they doing? They are making scented decorative items. They have usually been quite profitable because they had a niche market for high value decorative items. But now what has happened? The market for scented decorative items has become saturated. But CEO says, let's do one thing. Let us try and sell online. What is the benefit? Again, it's a new area, it's a new market, and none of their competitors, there is no competition in the online business at all. Okay, the managing director but is not happy. What does the managing director say? He is aware that W has had issues in implementing IT systems in the past. So IT systems were not successful in this company. That is the managing director's problem. Most recently, W planned to implement an online inventory system which would have allowed stores to check inventory levels in other nearby W stores. The system was discarded due to increasing costs and issues with the operating system and application software which were developed in-house by W small IT team. So that is why the managing director is apprehensive. What does he say? IT, they don't have the skills to do the IT. They have introduced IT, information technology moves in the beginning just to have inventory levels, right? An online inventory system. It does not seem to have worked for them. Why was it discarded? Because they had huge costs and they were not able to operate the system and application software which were developed in-house by their small IT team. So maybe the IT team was not skilled enough to develop this particular software. The CEO feels that the issues with the earlier IT plans were because of lack of control. W has never employed an IT director. You've not had a good IT team, maybe. You've not had an IT director, somebody to give the direction to the IT team. And the CEO has therefore recommended that if W decides to expand into online retailing, this role will require to be filled. So we will get an IT director is what he says if we go in for online retail. CFO who recently joined the W mentioned that operating across large number of states through online retailing involves cumbersome data-intensive exercise. For this, they need to be integrated through cloud-based ERP program in addition to other operational requirements. So there is need for an additional budget. Clear? And what are the things that we have to do? What are the issues that they will face while launching online? And what is the and whether IT is a strategic decision or not. So what are the 2 points? Identify what are the issues that you face, students. Some things are already given to you. One is you don't have in-house IT resources. That is your problem. You don't have a proper IT team. You don't have the skill. Next is what you have seen, that there is a cost issue. The CFO has already spoken about it. There is going to be a lot of costs involved. Third shall be what? Fear of technology. Whenever there is online, whenever new IT systems are being used, keep this in mind. There is what is called technophobia, fear of technology. So there can be a lot of resistance from the people. Next is lack of customer interest. This is another thing, students. In online, when you are having online sales, online retailing, you've never done it before. Is the customer interested? Is the customer interested? How do we know? Lack of customer interest, we do not know. So that's another issue, because there are some products, scented candles. They may want to see this. They may want to, I'm saying, see the scent. You know what I'm saying? They may need to sniff and identify whether it's a scent they like or they don't like. Correct? So that is another thing. And again, with online parameters, always you will talk about security issues. See, these are general pointers. It is not under any specific topic as such. So they do not have IT resource very clearly given in the question. There will be high cost. You know that. This is something you can always say, that there is always fear of technology when you're having online or technology. Online, particularly when you're going, the security measures, you have to be very careful. People will be making payment. Their cards should be secured. So payment sites, there should be a lot of security. That must be there. And remember, will the customer be happy to come online? Will the customer want to buy online? Correct? Particularly because these are scented products. Do they not need to sniff? Do they not need to identify the scent? And what is the other thing? Why is it a strategic decision? What do you mean by a strategic decision? Explain the requirement for it to be a strategic decision. What is strategic? Who deals with strategy? Who deals with strategic decision? The top management. So is this a decision which can be taken by the junior level staff, or does it have to be taken at the top level? If so, why? The requirement for IT needs to be, they've already told you it is a strategic decision, but why is it a strategic decision? What is the requirement for it to be a strategic decision? One reason is gain competitive. Why are they going online? Because their markets seem to be saturated. So they are looking for an online area, they are looking for a new market area, and that is the online sales. What is the purpose of this? To get a larger market share, to gain competitive advantage, particularly when competition is not that even their competitors do not have an online presence. It may be a good time to enter into this market before anybody else does. Stakeholders' interest, again, strategy. Stakeholders, the investors, the shareholders, and the customers. If you take two of these stakeholders, you will see both of them. A lot of money will be spent in introducing this. This money may result in higher sales, greater profitability. Obviously, the investor, the shareholders are interested. Similarly, the customer may also be happy with an online platform. The customer may be happy with a good inventory system, where a customer knows what is in store, what is in stock in a particular store before he walks into that stock. So when you're talking of stakeholder interest and satisfying of stakeholder interest, again, it's a strategic decision. Very high cost. Junior level is not going to determine this. It is a high level. It's a top management decision. It's a strategic decision to see whether it's worth making this investment, right? Making this huge investment in IT systems for online retailing. That is why it is a strategic decision. Another thing is online is fast moving. It moves fast. So there is always threat of competition. Things change very fast. There is need to stay updated, and two, other competitors are also likely to get into competition. So one needs to be very, very alert and completely always updated. These are the reasons why this IT, the requirement for IT is a strategic decision, not a low-level operational decision. Okay. So what are the issues? There will be issues that W will face with its proposed move into online retailing. The same points again and again. I am saying don't worry too much. You don't have to say the exact same thing. Your construction of sentences may be different, but you already know this. Lack of in-house IT resources. Pick from the question, whatever is given there. You have information, pick from that. They do not have somebody to guide them. They do not have an IT director. While W may be able to hire someone to quickly fill this role, they may lack experience of W's business. That is the small problem. I may be able to get an IT director, but will they understand? Will they be familiar with my kind of business? Correct? Will lack the experience of W's business by the time the online retailing is started. So quickly you want to start. Will they get identity? Will they be able to understand the business? They already have an IT team, but they may not have the time or experience for this online project. This means you will need more resources, or you might have to buy systems from other agencies. So basically no IT director, not enough people, correct? It's also important to note that an online retail system would also be required to have accurate information about inventory levels. You remember they said it had failed. This is also very important. It does not have currently, because it failed, an automated inventory control system because it was abandoned. This also, it has already been suggested, right, by the CFO. It can be resolved with additional investment in cloud-based ERP. So lack of IT resources, no director, not enough people and staff to do it, what was this last one? That even their inventory control system will have to be updated, made up to date, made live. So what will happen? You will need cloud-based ERP program. Setup running costs. This also we know that the additional costs will be there. The investors want to see a return on their investment, but the cost of setting up and running an online retail system may be high. In the short term, setup costs may mean the shareholder returns will fall. So obviously this year, initially there will be cost, there will be investment. You may not immediately get the returns. That is something which one needs to understand. So W will need to analyze whether additional profit it can make by acquiring new customers online will exceed the cost. Cost benefit analysis will have to be done. Any further investment, again, if we get more IT people also, that is also an investment in human resources. This also increases costs. Two issues. What are the other things we said? Technophobia. Staff at W may be concerned about their skills to use the new IT system, so they may resist the introduction of change that makes them feel or appear incompetent. In addition, what is the other thing that they have said? MD has already expressed concerns about the launch of this system because they've done it in the past. It has not been successful. So very, very important that online, if retailing, if you're going to do, top management support must be there, right? Lack of customer interest. What did we say? Will the customer go online and buy? W's customers may not be interested in purchasing decorative items online. Scented decorative items. Let's put this here. Scented decorative items online. They may wish to try out or physically see the product for themselves rather than buying it online. Moreover, these decorative items may require very high shipping and handling costs. This will also encourage the purchase at a physical location. It is not clear from the scenario whether the CEO has undertaken any market research. Has they taken market research to see that there is an online market and people are interested in buying? That's what. So this would be important before making the decision about beginning online retailing to avoid launching a costly website that fails to attract customers. And finally, security issues. Whenever there is IT introduction, we have to be careful with security issues. As W will be processing transactions through its website, it will require to ensure that customers are protected from credit card fraud or data errors. Their online stores are also likely to face phishing attacks, distributed denial of service attacks, man-in-the-middle attacks, etc. So if you remember these terms, go ahead and use them. This problem can be resolved by taking steps to offer secure connections and internal data protection. So there is security, they have to take adequate care. have to take adequate care. Next was what? Explain the requirement for IT to be a strategic decision, because we need competitive advantage, shareholder and customer interest, high cost and fast moving. Okay, let's discuss this also, students. Firstly, it is vital that W as IT systems represent at the strategic level. What again, I repeat, what does it mean? Is it at the board level? Yes, top management level, at the board level, right? Why is that? Competitive advantage. The market in which W operates, they've already said, is saturated. How will they capture? It will be hard for them to capture additional market share unless it identifies a way to differentiate itself. If online retailing is a success, it will give W a competitive advantage over its opponents and should be a part of W's strategic decision-making process. Correct? Stakeholders, online retailing is looking good from long-term perspective as online selling is in trend now. Therefore, expansion of W is of great interest to W shareholders. It is crucial that the directors monitor its progress. In addition, customers are presently able to check the inventories within W. They may be interested in IT system that would enable them to save needless journeys into W stores for items that are not in inventory. But both of these we mentioned. Shareholders, of course, they want a return, right? And customers, they would want to check inventories. Cost of IT systems. Setting up an online retailing involves high levels of expenditure. For W, there is a risk of costly mistakes if it is not carefully controlled. This is evidenced by the failure of its inventory control system. Failure of such a key project could have a major impact on W's financial position. And what did we say? Fast moving. So what happens? Competition can enter. Things can change fast in the industry on an online platform, and they have to be abreast. They have to be updated all the time. Technology is a fast moving area, and even if W becomes successful, first mover, they may be the first mover, but that doesn't mean there won't be more competition later, right? First mover in the market by selling online, rivals are likely to follow W into the online retailing. In this environment, W's IT systems will need to be continually monitored and kept up to date to ensure it remains competitive. What do you say, students? Both these case studies, not very difficult to tackle, is it? Okay, I hope you find them useful, students. Thank you. And if you find the session useful, don't forget to like, share, and subscribe. Thank you, students.